US President Donald Trump has threatened an additional 50% tax on Chinese goods if Beijing doesn't drop its 34% retaliatory tariff on US products. Shares tumbled around the world today as concerns continued about the economic fallout from the enormous tariffs imposed by the US on its main trading partners. In Hong Kong, shares suffered their worst fall in more than 16 years, down 13.7%. In Dublin, the ISEC index of shares closed down over 4%. It was a similar story in London, where the FTSE also fell sharply on opening, but rallied somewhat during the day. And the pattern continued across Europe, including on the French and the German markets. And in New York, the volatility of the markets was evident, with the Dow Jones opening lower, then spiking amid rumours of a 90-day pause on tariffs, only to see those gains fall away again almost immediately as the White House denied the story. A short time ago, stocks there were down 2%.
Happy scenes on Wall Street as the opening bell rang out today, but the smiles quickly turned to frowns as the US markets plummeted. Once again, there was a brief rally when incorrect reports emerged that Donald Trump may be considering pausing tariffs.
That Trump will consider a 90-day pause in tariffs for all countries except for China.
Reports of a tariff pause were dismissed as fake news by the White House, and the markets plunged back into the red. Asian stocks suffered some of their biggest falls in decades, and European markets closed sharply lower, including Dublin's ISEC index.
The only way to ease the carnage on the stock markets is for a negotiated pathway between the United States and the European Union. The trade between the two is the largest in the world, and clearly it would be a signal for stability if the European Union and the US could engage in negotiations.
Tariffs at this sort of level, if they do stay, are going to cause a global recession, and the markets really tumbled heavily on the back of that and are still tumbling today, even though there's mixed messages about whether there's going to be a negotiating stance here or a change. The markets are still looking towards a global recession here, and prices are being adjusted accordingly.
But as analysts warned of a global recession, Donald Trump took to social media to threaten additional 50% tariffs on China. He added, however, that negotiations with other countries that have requested meetings would begin immediately.
Is there pain in the market? At some point, you're unwilling to tolerate this idea of a Trump put. Is there a threshold?
I think your question is so stupid. I think it's I don't want anything to go down. But sometimes you have to take medicine to fix something.
The US president today urged Americans to be strong, courageous and patient, claiming that greatness would be the result. But judging by the ongoing market turmoil, his message is not being heard. Brian O'Donovan, RTE News.
Well, let's get more on all of this now. We're joined by our Washington correspondent, Sean Whelan, and our Economics and Public Affairs editor, David Murphy. Sean, to you first. Despite President Trump defending his tariffs, the markets aren't buying it, and now he's threatening more tariffs on China.
Yeah, that's right, Sharon, and that's having predictable effects on retail-exposed stocks. Big retailers like Amazon, like Walmart, like Target, these are people who literally sell Chinese goods by the boatload. They're being hit on the expectation that prices are going to rise in stores for consumers, and that is triggering more fears about inflation and a slowdown in the wider US economy. The markets here have been up and down. At the opening, it went down another 5%. Then there was this rumour that President Trump was considering a 90-day pause on tariffs. This is something that started on the internet on Sunday evening. Then that saw them spike up 7%. That was dismissed as fake news by the White House. Now markets are down about 2% on the day at halftime in the trading day here in the United States. So it's just a whipsaw effect, back and forth. Nobody's really sure what's going on. We've had presidential advisors like Peter Navarro, who's extremely influential on this, saying in response to suggestions from the Vietnamese, for example, that they would cut their tariffs to zero and try and get reciprocal zero tariffs from the Americans, saying that's no good. We're not interested in your tariff rates. What we want is all the non-tariff barriers. And I think that one directed particularly at the European Union when he said we want VAT to be abolished on American imports. And that's not going to happen. European governments can't afford the loss, and they can't afford the uncompetitive nature of doing such a thing. But if that is what is driving the policies, then that's something that you can't really negotiate against. The European Union is in delicate talks at the moment, deciding on whether and how They should make a response to this. It looks like they're trying to push for talks, trying to negotiate their way through this trade mayhem that's going on. But if the Americans are in the mood for not negotiating and insisting on changes to things like VAT, the ban on hormone beef, the ban on chlorine chicken, these are things that European politicians simply are not going to be able to deliver. And then this trade war is going to get worse.
All right, David, what could cause all this to settle down?
So I think the first thing is if there was to be a pause in terms of the introduction of tariffs. The second thing is if there was any indication at all of any solid negotiations that could lead to a deal. But so far, there's neither of those. Instead, Donald Trump has doubled down and he's committed himself to the introduction of tariffs. He says it's going to raise billions of dollars and they can use that to run the United States. And then he's expressed this idea that perhaps they could dismantle the income tax system in the States because they'll be collecting so much money by way of tariffs. But what's happening in the stock market, while it's immediately bad for investors, it's certainly bad for people with pensions. In a way, it's a forerunner of the damage that's going to be done to companies. And that is a forerunner of the damage that's going to be done to economies all around the world, including Ireland.
All right, David Murphy, Public Affairs and Economics Editor, and Sean Whelan in Washington. Thank you both.
The growing volatility around the world caused by President Trump's tariff plan. We're joined in studio by Conal McCrillia, Chief Economist at Bank of Ireland. Thanks a million for joining us. Roller coaster doesn't quite do justice to today. But there's plenty of people watching this programme who don't own shares and think, why should I worry?
Well, they may have it in their pensions. And I suppose what really is happening today is doubts around the global economy going forward. What US President Donald Trump is suggesting is effectively removing the United States from global supply chains. That can be very inflationary. Means we have a less efficient global economy, means higher prices for everybody. So this is something where Goldman Sachs this morning said we could have a US recession if the tariffs on April the 9th go forward. So it's extremely serious. And, you know, I suppose that's one reason why it may not happen. We're still trying to judge if Donald Trump is serious about doing something which would be very damaging to the US itself.
Now, what we saw today, sort of stocks nosedived, and there was this rumour that he was going to delay for 90 days before introducing the tariffs. And the market seized on that because that's the kind of the sensible thing to do, to hold off on the tariffs, have negotiations, see what you can get.
It is. I mean, the German stock market was down almost 10%, erased those losses, finished down 4 or 5%. So it's been extraordinarily volatile. And I suppose when you look at the tariff announcements last week, the one thing that was mildly positive is that Canada and Mexico are actually excluded from the 25% tariffs, which Donald Trump has threatened on a number of occasions at this point. So the evidence when it comes to Canada and Mexico, at least, is that if you bargain hard, he is willing to go back on his initial threats. So again, China had its retaliation of 34% tariffs on Friday. Just a couple of hours ago, we now look at Donald Trump is suggesting over 100% tariffs. Now, these things will be extraordinarily damaging for US consumers. The Peterson Institute in the United States suggested they would cost the average American family $2,600 with 60% tariffs, about 4% of their income. So these are things that are very damaging for the American economy. And you really need to ask yourself, is Donald Trump credible in terms of his bargaining position?
Indeed, but he's saying, well, look, sometimes you have to take medicine. You don't like the medicine, but it's going to cure you. But some economists would say, well, the American economy wasn't sick, doesn't need medicine.
Certainly not. And I suppose it's really the root issue here is the US federal deficit. Donald Trump has been attracted to appealing apparent solutions to the fact they're running a 6% of GDP deficit. Elon Musk's spending cuts, revenues from tariffs. These things are just not going to work, and they sort of detract away from what the IMF is saying to the US government, which is that really to get that deficit down with the federal debt now at 100% of GDP, the US needs tax increases. That's obviously anathema politically in the United States. Donald Trump would prefer to have tax cuts. So for the moment, we're entertaining these extraordinarily unorthodox policies like tariffs, like DOGE, which ultimately no one really believes are going to work. And as we move through the summer, we'll see the Republicans' budget proposals work their way through the Senate. And that may place pressure on Trump and may make him roll back perhaps on the tariffs.
OK, a lot of attention on people like Peter Navarro who are advising President Trump. But Donald Trump has been talking about tariffs and talking about his dislike for globalisation for decades. He might actually believe this.
He may well do. When you look at Peter Navarro, remember one famous quote of his is that he saw all his students losing their jobs to Chinese companies. Well, the US unemployment rate has been very low. I think the US economy has done pretty well. In the 1980s, we used to ask ourselves, why is there lack of convergence in living standards between Africa, Asia and the West? Now we're asking how fast China's going to catch up. So globalization has worked for a lot of people, but at the same time, there's obviously distribution of income issues in the United States. And unfortunately, China has become a kind of a catch-all bucket, if you like, for these kind of grievances in the United States. So it's really, again, to do with their system of welfare, the redistribution of their income. So unfortunately, it's a simple enemy, if you like, for Donald Trump to draw attention to.
Is there any way this ends well for us?
Well, I think this morning you saw Goldman Sachs predict a US recession at the April 9th. Tariffs went ahead. Jamie Dimon, the head of JP Morgan, also give warnings. So there is a concerted effort to try to have a slightly more mature look at these issues, hopefully in the fullness of time. Just like Canada and Mexico, Donald Trump, with the right political choreography perhaps, can be seen to row back. A month ago, Mara Sefcovic was saying there was the bones of a deal, maybe lower tariffs on US car imports into the European Union, spending on military equipment, LNG gas. So perhaps there is a bones of a deal, but we're going to have a couple of weeks at least, if not months, before that can be arrived at.
OK, Conor McCullagh, Chief Economist of Bank of Ireland. Thanks for joining us.
Thank you.